Hello everyone, welcome back to this week's Technical Insights. Global equity markets ended the first week of October on a positive note as stocks advanced on Friday after an above expectation non-farm payroll reports gave investors confidence around the health of the US economy. The Dow Jones Industrial Average added 341 points or 0.81% to notch an all-time closing high of 42,352 points. The S&P 500 rose 51 points on Friday or 0.9% to 5,751 points, while the Nasdaq Composite jumped 219 points or 1.22% to 18,137 points. The US indices rallied after the data showed that non-farm payroll numbers grew by 254,000 jobs in September, far outpacing the forecasted gains of 150,000 from economists. The previous non-farm data in August was also revised upwards to 159,000 from 142,000. Unemployment rate also ticked down to 4.1% despite expectation for it to hold steady at 4.2%. This is the strongest job growth in the 6 months and higher than the average monthly gains of 203,000 over the prior 12-month periods. This data gave investors a lot of reassurance that the US economy remains resilient, supported by a healthy labor market. We are now in an environment where good economic news is good news for the equity markets, as it increases the likelihood of a soft landing. For the week, the Dow Jones Index inched up by 0.09% for its fourth consecutive winning week. The S&P 500 finished up 0.22% for the week, just 16 points away now from its all-time high on 26th of September. The Nasdaq Composite Index added 0.1% for the week after a major turnaround, given that the tech-heavy index came into Friday's session down more than 1%. Mega tech stocks like Tesla, Amazon, and Netflix were among the mega tech stocks that were surging on Friday, which helped explain the outperformance of the Nasdaq Composite Index. The financial sector was the top performer in the S&P 500, climbing up 1.6%. JP Morgan and Wells Fargo jumped more than 3% each. Globally, there has been a lot of things happening. We saw Hurricane Helene, the deadliest mainland US hurricane since Katrina in 2005, causing more than 200 deaths and hundreds more still missing. The US seaport worker and operator strikes, causing the shutdown of US seaport for the first time in 50 years, and of course the closely watched Iran and Israel war, which caused the oil price to spike again last week. Crude oil prices rose again on Friday, bringing the weekly gain to around 9%, and oil has been pushed higher as a result of the intensifying conflict in the Middle East after Iran launched a missile attack on Israel. Energy stocks in the S&P 500 also jumped last week due to the oil rally. The S&P energy sector was up 7% and marked the sector's best weekly gain since October 2022. In Asia, Hong Kong stocks surged for the third consecutive week, bringing the 3 weeks gain to over 30%. The Hang Seng Index on Friday jumped 623 points or 2.82% to 22,736 points. The Hang Seng Tech Index shot up 248 points or close to 5% to finish at 5,227 points. For the trading week, the HSI was up 10.2%, while the Hang Seng Tech Index was up a massive 17%. WeChat owner Tencent gained 2.4% to Hong Kong dollars $477. Alibaba gained 3.5% to Hong Kong dollars $113, while e-commerce giant JD.com surged 7% to Hong Kong dollars $182. Many investors are still waiting to see the full effects of the policies announced by Beijing earlier to justify a long-term turnaround in the stock market. The current rally thus has more legs to run as many Chinese stocks are still trading below their 3 years and 5 years average. Chinese markets on the mainland were also closed for the Golden Week until 7th of October. The e-commerce company will also be among the key beneficiaries of further stimulus measures that Beijing could announce that will further boost Chinese consumer spending and consumption. Back in Singapore, our STI Index managed to close higher on Friday. We are up about 11 points or 0.33% to 3,589 points. That's about 63 points away from the year-to-date high on 24th of September. For the week, our benchmark index was up about 15 points or 0.44%. This is a good sign because the previous week, we saw STI clock the first negative week in 7. So at least last week, we do not have a second consecutive losing week, meaning that the pullback that we saw last week could be largely technical after hitting the 6-year high at 3,652 points. Year to date, our STI Index is still up about 10.75%, playing catch up with the major US and Hong Kong indices, who are now up more than 20% this year. At the top of the STI table on Friday was Seatrium. Shares of Seatrium advanced amid a steady surge in trading volume on Friday. At the close, Seatrium share price jumped 22 cents or 12.43% to $1.99. So for this week's technical analysis, let's look at Seatrium Limited. Last Friday, Seatrium share price jumped 22 cents or 12.43% to close at $1.99 after hitting an intraday high of $2.04. The previous time that we covered Seatrium was on the 5th of August, around this period, where our view was the then 20-day moving average at $1.45 and the year-to-date low over here at $1.36 are possible support level in a range-bound formation in Seatrium share price for investors looking to get into Seatrium. So I hope you managed to get into Seatrium shares around the $1.45 level over here. The average 12-month target price from analysts covering Seatrium then was $2.60, representing a 70% upside from here. On the 2nd of August last month, Seatrium announced earnings of $36 million for the first half of 2024, ending 30th of June. This was the first set of profitable half-year results since the completion of its merger with Keppel O&M in 2023. After market close on Thursday, Seatrium announced that its chief executive, Chris Ong, had been granted a total of 2.2 million of the company's shares under its performance and restricted share plan on the 31st of May this year. The share awarded to Ong is for the performance from January 2024 to 31st December 2026. So this could be an indication that Seatrium is likely to hit or outperform its target this year. Looking at Seatrium share price, last Friday jump of 22 cents has reached above the double top or the triple top formation that we saw in April and May, around the $1.92 level. So this level at $1.92 would become a resistance turn support level for Seatrium share price going forward. The next support level for Seatrium share price will then be the red color line that you see here, which is the long-term 200 days moving average, now at $1.73. The next resistance level for Seatrium share price could be looking at the February high of $2.08 over here before we hit the January high over here of $2.32. Looking at the indicators, the MACD now no doubt has a very strong positive reading, indicating a strong uptrend momentum. The latest RSI reading at 79 has also reached above the 70-point overbought mark. So we are likely going to see a technical pullback on Seatrium share price. So for investors looking to accumulate Seatrium share price, the $1.92 level, which is the level over here, could be a resistance turn support level, with the next support level at the red line, the 200 days moving average at $1.73. This will be the key support levels that you should be looking out for to accumulate on Seatrium share price. And these are the updates that I have for you this week. I hope you find this information useful, and do remember to like, share, and subscribe to stay updated with the latest market movements. And I'll see you again next week in the next Technical Insight.